Hello, I'm Dr. J, and this is the Volatility Sonar Report. The reason it's so important for you is this is like a heartbeat for the market, folks. It tells you whether or not we expect the market to go up higher dramatically or down lower dramatically. As VIX moves up, they're expecting dramatic moves. As VIX moves down, that means volatility is going to be more stable. The markets are going to be more stable. Here's today's report.
Welcome, this is your Option Monster Volatility Sonar Report. From the floor of the CBOE, I'm Jamie Tyrrell of Group 1 Trading. Well, the market is slightly down today amid fears of General Motors declaring bankruptcy in the near future. The one bright note of the market so far has been the financial sector. With a lot of earnings coming up this week, there appears to be a little bit of optimism. Citi is up about 10%, as is JP Morgan. So all told, market down less than 1%. What we talked about heading into the weekend, we talked about the disparity between the VIX cash and the VIX future because of that 3-day weekend coming up. Now, if you look, we are now past that 3-day weekend, and today on Monday, the VIX cash has jumped from 36.5 to 38, but the VIX futures are actually down slightly. So most of that difference between the VIX cash and the VIX future, it was at about $1.70 before the weekend, has evaporated with now only trading days left until expiration. So that's something we always see in the VIX heading into weekends, especially long weekends. You'll see a little dip in the VIX cash as people prepare for non-trading days and less volatility over that period. Then on Monday, you'll usually see a bump in the VIX cash, all things being equal. So that's what we've seen today. We're at 38.15 on the April future, and tomorrow is our last day to trade April before expiration. So people are really putting their ducks in a row, trying to clean up their positions heading into the print. The one big trade we've seen is in April is the April 37.5 40 risk reversal. The customer here bought the April 37.5 puts for 50 cents, sold the April 40 calls for 40 cents. So he paid a dime on 2,000 risk reversals. So in this case, the customer is looking for the reward below 37.5, and they're taking a risk against that above 40. So that bet will pay off if the VIX continues to drop into the mid-30s, and it will lose if we pop back above 40 again. So that's what we've seen so far. Pretty light trading in April. If you look at open interest in all of the VIX months, most of our big customers have really been focusing on May and June of late. So April, there's less positions to unwind. There's less people who have 50,000 lots on, 20,000 lots. It's more smaller players who focused on trading April and our bigger players who traded May. And that's led to an expiration that is pretty light on volume in April, just because there's not that many people with big April positions. So that's what we have here. One full day until expiration. This is Jamie Tyrrell, Group 1 with Option Monster.